will be given by CAK Gurraj Acharya from Bangalore. His topic of discussion will be Statutory Compliances for MSMEs and Startups. I request Anil Bharadwaj to please introduce this great personality.
Mr. CAK Gurraj Acharya on the dais. It's a great pleasure for me to introduce such a renowned personality. Pustakadi doretarivu mastakadi tadeda mani, chittadolu bedadarivu tarutadeda pushpa, vastu sakshatkara antarikshಣೆಯಿಂದ ಶಾಸ್ತ್ರಿತನದಿಂದಲ್ಲ ಮಂಕುತಿಮ್ಮ is a great 4-line poem that suits very much for the renowned and distinguished guest here. The meaning of this Kagga I'll tell you at the end. In fact, you can understand yourself once I tell out his achievements. Mr. CAK Gurraj Acharya hails from the temple town Udupi, brought up in Iron City, Ballari, and is now settled in Knowledge City, Bangalore. We feel very proud that Mr. K. Gurraj Acharya has grown in Iron City, our own city, Ballari. That's why he is a steel man, we can say. He qualified as a chartered accountant after completing articles under Guru Prasad and Co. He is presently the senior partner of Messrs. KG Acharya and Co. Chartered Accountants, Bangalore, and he is specialized in corporate finance, corporate taxes, and company law. The great personality has achieved first rank in his BCom, 21st rank in CA Inter, and 10th rank in CA Finance. He has also done ICAI, and I am very happy to share that he has got the first rank in ICAI Inter and third rank in CA Finance. By now you would have understood why I told that Kagga, Pustakadi doretarivu mastakadi tadeda mani. So he is expert in book knowledge also. He has achieved the wonderful things in his academics also that has been given as a crown on his head. Mastakadi tadeda mani, chittadolu bedadarivu tarutadeda pushpa. Just because he has achieved good things in the academics, it did not stop there. He has jumped into the subject very deep and analyzed it practically, and today he is here to tell us what practically we have to achieve and what theoretically we have to read and understand. Both are very important, theoretical as well as practical aspect. This dual aspect only supports or helps any person to achieve things in life, and he is a role model for all of us. And other achievements of his, he is currently the board of directors, one of the directors of Karnataka Bank. He was the director of State Bank of Mysore, SBM, was a member of Karnataka State Level Audit Advisory Board, was a co-opted member of Expert Advisory Committee and Committee of Accounting Standards for Local Bodies by ICAI, New Delhi, was a member of Financial Reporting Review Group formulated under Financial Reporting Review Board of ICAI, New Delhi, authored a book titled Internal Financial Control, Practical Handbook on Audit Report on What Can Go Wrong, published by Karnataka State Chartered Accountants Association, and he is also the resource person on accounting standards, standards on auditing, Companies Act 2013 and LLP, corporate finance and financial analysis, corporate tax and tax audit. And his achievement goes on like this. If I only tell his achievement, he may not have time to explain about the topic today. So I stop at this juncture and hand over the mic to him and dash to him, and it is pleasure for all of us to listen for another 1 hour from the distinguished faculty today. Thank you very much, sir.
I should only say that business stands on 3 legs. business, every business for that matter, be it an MSME or a large entity, stands on 3 legs. I put the stool like this. The first leg is called production, the second leg is called finance, the third leg is called marketing. So it is not a 4-legged chair that we will be comfortably sitting always, but in business it's always 3 legs. Now you're sitting on a 3-legged chair, you should try it. Now you may tilt and fall. That's how the balancing happens in business. The next question that I ask is, which is the most important leg of the business? Production, finance, or marketing? You're all MSME. I mean, I know there's some chartered accountants too, budding MSMEs and also people who are in the micro and small enterprises. Which do you think is the most important leg? Production, finance, or marketing? I will tell you one thing, that all the 3 are equally important. If the question is like this, which of the 2 eyes are more important to you? Which of the 2 eyes are more important to you? But having said that, I can at least in this particular question answer it probably authoritatively to say, if somebody said finance is important, maybe sir, in your business finance is slightly lacking. If somebody says production is important, then production facilities are not up to the mark. And somebody says marketing, both the things are there, marketing is missing. Why I said is, please understand, in any business, it is marketing which is most important. If you do not have the marketing, production and finance are just raw materials. And Peter F. Drucker, one of the main famous management guru, went on to say that in business, it is only marketing and innovation which is very important. Marketing and innovation which is very important. Everything else is a cost to the company. Everything else is a cost to the company. Now, why did I talk about marketing to begin with without acknowledging any of the organizers? Just to say that Anil Desai did a fantastic job of marketing me more than what I am. The product is one thing, marketing is another thing. You know, when he was explaining about Anil Bharadwaj took a fantastic, the product was sitting there. I told that the product has to be sitting there. And the product was there. He explained it in so beautiful words that I only said, where is the product? He was talking about me. So Bharadwaj, you did a great job of marketing. In fact, this is what has to be there as a entrepreneurial blend. Marketing and innovation. Marketing and innovation backed by what Narasimhan talked about, technology. If you are not technologically savvy, you are as good as illiterate. You are as good as illiterate. Now let me come to thanking the Ballari branch of CIRC. No, that's what they were talking about, of ICAI, which is conspicuously missing there, jointly with Hubli and Belgaum branch. Thank you for inviting me. But the best thing is I have to leave at 12, so I will stop at 12. Okay? So having said that, the topic that I am talking today is on statutory compliances for MSMEs and startups. Now, what is an MSME? I would like to get into the details.
It's there, I guess you have not seen it.
Okay, so the definition of MSME, I explained it in the last evening. One is the turnover based, the other one is the investment based. What is priority sector lending? I have my friends from the banking fraternity here. They will all tell you that as a banker, the deposits that I have is a liability. I have to advance that, that is my asset. Out of the total advances, 40% of my total advances have to be towards priority sector lending. 40% of that has to be towards priority sector lending, out of which we have sub-priority of 18% towards agriculture, 7.5% towards micro enterprises. Now that is a subsector which we have to. In case the bankers don't adhere to this rule, I will have to keep that money in an RIDF. It's a specific investment where I get only a 3 to 4% return. So which we lose actually. It's a penalty to the banker if they don't lend it to the priority sector. That is why the bankers keep on saying that please lend it to the priority sector. And this happened to be a priority sector, including the traders. The traders wouldn't get any other advantage of the MSME, but to the limited extent of priority sector lending, they do get that. Now what is also, please understand, if you are a turnover of, let us say, 7 crores, whether you are a micro or a small, by this definition, you are small because you have breached 5 crores. Let me tell you, out of that 7 crores, if 3 crores happens to be in exports, then your turnover is 4 crores. The domestic turnover is 4 crores. So what has to be considered here is only domestic turnover and not the export turnover. Similarly, in terms of investments, what has to be looked after is the return on value of the investment. Earlier, sir, when we were reading the small scale industries chapter, it was a gross investment in plant and machinery. Now it is the return on value. So every year, from the income tax return, the Udyam website will pick it up and say whether you are a small, medium or a large enterprise. So having said that, the definition of startup, I'm sure all of you know, up to a period of 10 years from the date of incorporation, either as a company or as a LLP, or please understand, even a partnership firm, a simple partnership firm registered with the Register of Firms could also be a startup. Here I have to just say that the benefit in income tax is not applicable to a registered partnership firm. It is applicable only to a company or a LLP, but for all other purposes, even a registered partnership firm could also be covered under startups. Now, turnover for the entity for the financial year should not exceed, in any year, for the first 10 years, they will be considered as startup, provided the turnover is not going to be beyond 100 crores. In any year, if it crosses 100 crores, they cease to be a startup. And what is the advantage of a startup? There are a lot of advantages which I will tell you. Not only first 10 years, not only 100 crores, they also have to have additional qualification, which is innovation, development or improvement of products or processes or services. You will have to prove that these elements are present, or if they are not present, another interesting thing which you can take into account is it is a scalable business model. A business model which can be scalable, which has a potential to improve your turnover with a high potential of employment generation. I am providing more employment, that itself is sufficient, or wealth creation. Could be subjective, but one can take a route under this particular definition to get the benefit of it. One of the important benefits is income tax in a startup for the first 10 years. Any 3 years out of the 10 years, he need not pay income tax at all under section 80 IAC. So that is the best advantage. So please take advantage of this. But there are certain additional conditions attached to that. You should also be registered with the DICR. I will come to that. So provided that an entity formed by splitting up or reconstruction of an existing business shall not be considered as a startup. You are already having a business. You cannot split that business and start. So that is also a condition attached. So there are a lot of advantages. Fast tracking and rebates on applications for intellectual property. Advocate Holla is here, he will be talking about intellectual property. So you have fast tracking and rebates on applications. I'm sure, sir, you will be covering that aspect. Access to 10,000 crores FOF, fund of funds. Self-certification under labor and environmental laws. Exemption on investments above fair market value. We have a section 56, 27B of the Income Tax Act, which says that in case the company collects premium in excess of the fair market value, it will be subject to taxation. That particular section will not be applicable to a startup. Government public procurement eligibility, faster exit for startups. But we always talk about how soon a company can be set up. The unfortunate thing is, what is the time frame by which, in case the company gets into a loss, how fast can I shut down the company? That aspect is somehow ignored in the Indian context, but they have said that for a startup, you have a faster exit for startups. Then there are Startup Hub, a one-stop network for entire startup ecosystem. And then income tax exemption, I talked about 80 IAC, 5627B, and ESOPs. There are certain relaxations for startups. Now, this is the slide where I will be resting my next 25 minutes or 20 minutes. Mr. Nayak, you will understand. I know that Nayak is the ನಾಯಕತ್ವವನ್ನು ತಗೊಂಡಿರುವಂತಹ ಕಾರ್ಯಕ್ರಮ ಇದು. ನಾಯಕರು ಈ ಒಂದು ಸಭೆಗೆ ತುಂಬಾ ಒಂದು ಶ್ರಮ ಪಟ್ಟಿದ್ದಾರೆ. I know both Nayak and Pandaraj talked to me from Wakao. From what our Central Council member Kota Srinivas mentioned, I think that was in November. The seed for today's program was planted in Mumbai, and they called me and said, you have to come. Then the germination happened in my mind what I should talk for this particular audience, and I said, because I know it's a mixed audience. The difficult thing for a chartered accountant or for any speaker is when he has a mixed audience. So therefore I decided this particular terminology or a coining was very much done somewhere in January 2020, Mr. Nayak, when we spoke for Business Tonic 100th episode, where I spoke on 10 commandments for business. Then I said, let me develop on that and talk about, because I'm talking on statutory compliances, I will talk about 10 commandments on statutory compliances. This is particularly applicable to MSME, generally applicable to any business. Let me now go on to read what the 10 commandments are. The other name of busyness is compliance. Let me elaborate. Now in income tax we go on to say, should we maintain books of accounts? You know, we always say that up to 2 crores you don't have to maintain books of accounts, you declare 8% income tax. You know, that is sufficient. Well, this section 44 AD, section 44 ADA goes on to say for a professional up to 50 lakhs, you show 50% income, you don't have to maintain books of accounts. You don't have to maintain books of accounts is what the income tax says, as long as you are showing a minimum of 8% or 50% as the case may be. But as a businessman, if you follow section 44 AD and 44 ADA, you will be ruined. Let me tell you, you don't have to show the books of accounts to the income tax department, but better maintain books of accounts if you are a businessman. If you think that maintaining books of accounts is difficult, and today of course it is not the red book or the the pen and paper book we are talking about, what Mr. Narasimhan talked about, definitely everybody should be digital. Now having said that, if you don't maintain books of accounts, your business from the day one, you cannot start maintaining the books of accounts after you reach 2 crores. So although section 44 AA, and I'm also talking technically for the chartered accountant, says when should you maintain books of accounts. Forget about 44 AA, ADA, ADA. It is every businessman. If you are in business, you don't have a choice but to maintain books of accounts. And can you, please understand, if you feel that business is having so much of compliance, then I would say you have other 4 heads. In income tax, we have got 5 heads: salary, salary के बाद house property के बाद business, then capital gains, and then income from other sources. If you choose the 3rd head, you have to be, that is why probably the busy in that busyness is whether you have business or not, you have to be busy, at least compliant. That is compliant. You know how many acts are there? Since Narasimhan, you are there, chat GPT, you can go and check how many central acts are there in India.
It will say message failure.
Probably. Oh my goodness, that is too much for me. It's too much for me. You know, I did that in the Google. You just get 993 central acts. Central acts. And the best part is you will have to know all of them, at least the major of them. I mean, I will talk about the compliances. If you do not know, there is one Latin term, ignorantia lexis non excusat. What does it mean? If you don't understand this, ignorance of law is of no excuse. You cannot, take shelter under the heading saying that I did not know the law, so therefore please pardon me. No way. So you have to know. I mean, if not the 993 laws, I will list out a few very important laws that every business has to take care of. Therefore I said the other name of business is compliance. You agree with me? If you do not want to comply, you should not be in a business. As simple as that. The next one. Naikre, chapter 11 of Bhagavad Gita on Urdhva Moola Madhashakam. It's talking about the big banyan tree. Our roots are not at the bottom, but at the top So it refers to the big banyan tree. Just like that, I felt that the roots of compliance culture is at the top. You cannot expect the accountant to maintain the compliance when the owner himself is not compliant. Now please understand that it is the owner who has to have the compliance culture, because it flows from there. If the owner is compliant, the accountant will be compliant. The owner cannot say, you come at 10 o'clock and he comes at 11 o'clock. I mean, everything happens as a matter of example by action rather than example by policy or a statement. So the tone at the top is very important when it comes to statutory compliances. The next thing is, bigger the vehicle, bigger the compliance. When we say vehicle, please understand, every business has an option to choose the vehicle. It could be a proprietorship concern, which I call it as riding a bicycle. It could be a partnership firm, which is like a two-wheeler. It could be like a LLP, which could be like an auto, or it could be like a company, which could be like a bus, and if it's a limited company, it could be like a aircraft. So that is the vehicle I'm just trying to compare. Depending on what your objective is, you have to select your vehicle. And you have to be very, very clear when you select what vehicle. Generally when they come and say, sir, we want to set up a company, the chartered accountants think that company means a private limited company or a public limited firm. So the point is, so much of compliances. When if you see the Companies Act, it is so thick today. It has got, what is Companies Act? Companies Act is a list of do's and don'ts. It's a list of do's and don'ts, mostly don'ts. If you do any one of the don't, the penalty is so much. Let me straight away take you to the penalty in the companies. Maybe useful to the chartered accountants. Not mentioning the sin on the letterhead when the documents are filed with the register of companies. What is the sin? What is the sin? They are telling you that forming a company is a sin. You know, sin is a corporate identification number. Corporate identification number. Not mentioning the sin on the letterhead, there has been a penalty of 5 lakh rupees.
Is a sin. Not mentioning sin is
a sin. Not mentioning company address in the letterhead, 94,000 rupees penalty. Not issuing share certificate within 2 months of the date of allotment, 1.5 lakh rupees penalty. You are supposed to issue share certificates when it comes for transfers within a period of 60 days. Not filing BEN 2, 2.97 lakh crores. Now let me spend some time. What is BEN 2? You formed a company. Who are the shareholders? The shareholders are another company, an LLP or a trust. The moment you have a non-individual as your shareholder, you are supposed to know, you are supposed to inform to the ROC who is the ultimate individual beneficial shareholder who is holding more than 10% in my company. I suppose I am clear. In the ROC says, section 89 and 90 of the Companies Act says that if the shareholder in a company is a non-individual, I have to go to the extent of telling, I have to go beyond the corporate, I have to pierce the corporate wheel and tell who my shareholder is a company. In that company, who is the shareholder? In that company, shareholder A and B. A is holding 50%, B is holding 50%. So I have to say that those people who are holding more than 10% in my company has to be informed through filing BEN 2 to the ROC. Not appointing a company secretary. Not appointing a company secretary. When do we have to appoint a company secretary? Every company, including a private limited company, please note, including a private limited company, if its paid up capital is more than 10 lakh rupees, have to 10 crores. What did I say? 10 lakhs. Okay, I just wanted to test you. So if it is the paid up capital is more than 10 crores, you will have to employ a full-time company secretary and he should be called as a key managerial person. Not having such a person within 6 months of reaching the 10 crores, or in case the company secretary resigns, you have another 6 months from the date of his resignation, 5 lakh rupees has been the penalty. Not holding board meeting within 120 days gap between 2 board meetings, 25,000 rupees. Not non-maintenance of registered office, 12.23 lakhs.
For board meeting now, that is, they have given the exemption for the small companies.
Yeah, good, fantastic. I am happy that you know that provision. Small companies have been given certain relaxations. The best relaxation is penalty is 50%. Please understand, no waiver of penalty is 50%. Small company means a company whose paid up capital is less than 440. Last year it was 220, now it is 440. Please remember that. 4 crores paid up capital and 50 crores of turnover. If you have a small company, no carry, no cash flow. You mentioned that, I was happy to note that. No cash flow. No cash flow statement to be prepared for a small company because not much cash flows in such a company. Narasimhan, you know, unfortunate. But please prepare your cash flow. I fully agree with what he said. Every company should keep track of cash flow statement because that is a fact. P&L is only a policy document. You can make your profit up and down. Cash is a fact. So therefore cash flow statement, but for small companies cash flow is exempt. Similarly, your board meetings can be held once in 6 months. That means 2 board meetings as against 4 board meetings applicable to a normal company. There are certain like this, so many other penalties which one has to be aware of. So going back to my bigger the vehicle, bigger the compliance. That's what I wanted to drive home the message. The fourth, please understand this is very difficult for me to explain. Difficulty in compliance is inversely proportional to the size of the organization. It is running slightly antithesis to point number 3. Difficulty in compliance is inversely proportional to the size of the organization. Bigger the organization, it is easier for complying because you have a compliance department to take care of that. When it is a smaller organization, a small company may say, where there are only 2 directors and 10 employees, all of them have to be busy doing marketing, production and taking care of the finances. I did not talk about compliance as one important leg. But in a larger organization, you probably have a 4th leg called, in fact in Karnataka Bank, or for that matter any bank, compliance is a very important department and we have a team of compliance department. Because that is the amount of compliances that we are required to have. When I read it out for so many other people, they were not able to understand. Then I have to tell him, the efforts are higher in a larger organization, but the difficulty of complying, because there is a specialist who is telling that what to do and what not to do, it is easier in that sense. Point number 5. Compliance is costly. Compliance is costly. Non-compliance is costlier. Every MSME has to understand this. Maybe for a chartered accountant, I would only tell that please take this 10 commandments to your clients and explain it the way I am explaining. Compliance is costly. Yeah, 10 lakh rupai CSR. You understand CSR? You have to pay CSR, you have to pay CSR. If you don't pay CSR, not only you will have to pay penalty, and you know how much is the penalty? It's a very huge figure. After paying the penalty, you still have to incur CSR. Still have to incur. It's not that this or this. But the very unfortunate point is, in fact, we were interviewing some of the candidates. They said that startups have a very bad culture of not complying. I mean, I'm not talking of the startups here in Bangalore. He was mentioning one of the candidates. I said, why do you want to leave a startup and come to our company? He said, sir, I'm afraid the startups the startups have a cultural, not all startups, some of the, maybe the company in which he worked. He said, sir, this is the company secretary was supposed to tell the board that this is a non-compliance. The board immediately comes back and says, what is the cost of non-compliance? What is the penalty if I have to if I don't do that? It says 10 lakh rupees. He said, provide for that, we will not comply. Please understand, that is a very damaging statement. It is not just 10 lakhs, which you probably could afford to pay. Most of the small companies cannot afford to that also. But a company, even if it is affording to pay 10 lakhs, look at the reputation risk. There's something called an operation risk, a market risk, a risk which we see. It is not 50,000, 5 lakh rupees, especially for a banker, and larger the organization, larger the reputation. So we say that please don't get into that particular culture. So compliance is costly, non-compliance is costlier. Now one of the things that immediately comes to the mind is, how will the government come to know that I am not compliant? Please understand, There are cameras all over the field now. The government knows what you are going to do. 26 AS, AIS. Somebody said when you are talking to MSMEs, please tell them about this. So therefore, please understand that this is a statement which is capturing. The moment you say, I have got some cash, I will go and deposit it. Then you earlier times, TDS ಆಗ್ತಾ ಇತ್ತು. ಈಗ TDS ಆಗ್ಲಿಲ್ಲದ್ರೂ the information goes to the income tax department. Whatever interest is paid, whatever deposits you make, all this information goes to the income tax department. Who gives this information? Now, whoever is the owner of that particular aspect, if it is a bank, if you are registering a property of more than 50 lakh rupees, the sub-registrar will send that information to the income tax department. So you will be thinking that JDA you entered, land kottu, building bantu. So many things I have seen. Duddu exchange agilla, land kotru, building bantu. Please note at that point there is a sale. You have sold your land and you have bought building against that. So all this information will be captured. Any transaction, if you put more than 10 lakh rupees cash in an SB account or more than 50 lakh rupees cash transaction in a current account, all these are captured. And cash transactions are supposed to be very bad in the eyes of income tax department. There is something called we have so many reports which go from the STRs, CTRs. Now, CTR may be it's a central tiffin room in Malleshwaram, but CTR means cash transaction report. STR means a suspicious transaction report. The banker reports all this to the income tax department. So please don't think that naan kannu munchkondu haal kudita idre prapanchakku gottagalla anta heli. Famous statement in them. So having said that, please understand that the department knows everything about what you are doing. So therefore, you better be compliant. Deal with compliant parties, else you suffer. What do you understand by this?
GST.
Input tax credit. You are rent.
ಸಗಣಿಯವನೊಂದಿಗೆ ಸ್ನೇಹ ಮಾಡುವುದಕ್ಕಿಂತ ಗಂಧದವನೊಂದಿಗೆ ಗುದ್ದಾಡುವುದು.
Point is, if you are from your supplier's point of view, it is input tax credit. From your customer's point of view, it is your TDS. So both ways, if you are not only you are compliant, also your connected people also must be equally compliant. Otherwise, you suffer. Compliance first, business next. A controversial statement. I don't know how many of you agree with this statement. You agree with this statement?
No.
Compliance first, business next.
Both.
In fact, this was a statement in one of the companies when the statement was made like this by the managing director, saying that compliance first and business next. The board went on against him, saying that is why the business is not growing. You cannot give a reason of compliance first and business next. For a businessman, business is very, very important and that should be first. Is compliance next? No, never. Business with compliance should be the mantra. I mean, you may have this to begin with, compliance first and business next, but when it comes to real business, it should be business with compliance. Then the next thing is, compliance is better than cure. Compliance is better than cure. I also already gave you an example of CSR. When do you have to incur CSR? Only if you are a company. And such a company has any one of these three criteria. Your net profit before tax is more than 5 crores. Your turnover is more than 1000 crores. Or your net worth is more than 500 crores. Now you may say, sir, I am a small company. I will not have 1000 crores. If the moment you are a 1000 crores, definitely you are not a small company. But a small company could mean 50 crore turnover. You may have a 5 crore profit. We have seen in our practice that possibility of a 5 crore breach is the fastest than the other two conditions. So once you are breached that, you are under an obligation to comply with the CSR. Otherwise, better than cure. Compliance is better than cure. ESI and PF. Please, all the business people, please understand that if you don't pay it by the 15th of the subsequent month, the ESI and PF department are very, very, what should I say, benevolent. They would only charge you extra interest for the delay. But the income tax department is working like a grandmother of the Department of ESI and PF, they are saying that I will not allow that particular expenditure to be allowed in the hands of the SSE, especially for employees' contribution. But let me tell you one good news, and which I have recently argued and won in the tribunal. Now, the biggest challenge we had was all these days we used to, for the benefit of the chartered accountants, I am saying employees and employers were considered to be the same. But the matter went up to the Supreme Court, and Supreme Court gave a checkmate. In the case of checkmate, they said employees have to be paid within 15th of the subsequent month. Let me now tell you, this is what the month of January, I pay the salary in the month of February. The due date, let us say I pay January salary on February 2nd. What is the due date of paying the ESIPF? 15th of February or 15th of March? 15th of February or 15th of March? January salary paid on 2nd of February. So is the due date of ESI and PF 15th of February or 15th of March?
February 15th.
This is what I argued. The company paid on 17th of February, and the tribunal has given me the order in my favor, because I went on to say it is from the month in which you pay rather than the month of salary for which you are paying. Okay, so this is a very good news. So we can take advantage provided you paid it on at least before 15th of March. This is applicable only for PF because ESI uses the word wage month. For ESI, maybe the stakes are lesser. ESI, the word used is wage month. For PF, it is actually the salary month. So the calendar month in which you are paying. So from that day, 15th of the subsequent month you can take. So compliance is better than cure. Yes, sir.
Yes, names are.
In my case, it was Soliflex, unreported, but I can share you the citation. This was also held by Mumbai Tribunal also earlier. So, and it is held in our field. So you can take advantage. The only thing is, how has it been reported in the tax audit report? In the tax audit report, the due date also has to be accordingly changed. But we No. In fact, the tribunal member asked, what have you told in the tax audit report? Then I only had to tell him, Your Honor, in the tax audit report it is told as 15th February, because at that stage, the chartered accountant did not know that particular rule. Now, should you not give the benefit of the thing by the fact rather than by a report? If the report is wrong, you have to overlook the report is what the argument we have taken, and he has considered that particular argument. Okay. Ninth point is compliance, very important. Compliance may not provide profits, but will provide a great peace. You can sleep with great confidence and also with value creation eventually. The most of the startups, the biggest problem is, sir, I think as Narasimhan said, sir, you are saying profits are there. Where are the profits? Profits are for books. Profits are for books, cash is for real. I don't have the cash in there. All your profits are blocked in inventory, receivables, or you would have gone in to repay your term loans and liabilities. So that is where it is. Forget about repayment. Repayment means no problem, I have reduced my liability. But mostly it will be in the form of your work in progress, finished goods, raw material. Raw material it will mostly be there in the form of receivables. So this is where we have a biggest. Compliance may not provide you profits, but will provide great peace with value creation. And the last thing, I have come here to market my profession. Okay, so the best compliance can be ensured if you have a best CA. I hope all of you agree with that. Best compliance can be ensured if you have a trusted and a best CA. Now, I cannot stop here, so therefore I go forward. Who is the best CA? You rank yourself, when all the chartered accountants are here, you have to rank yourself against each one of them. Knowledgeable and stays up to date. Definitely all chartered accountants are knowledgeable, otherwise you would not have become a chartered accountant. Okay? But whether you are up to date, stays up to date, please understand, this is not a certificate which you can keep it behind you and say that I am a chartered accountant and I don't have to update myself. No, therefore, knowledgeable and stays up to date. Point number 2, keeps the client up to date. Because you have to be so connected with the client that if you are up to date, he pays the ESI and PF on 16th of March and comes to you, not much can be done. So you'll have to tell him the changes that are happening. He has to be skillful. Now what is meant by skillful? He has to be articulating his views properly, computers or whatever. He has to have the required skill sets to convert the knowledge into actions. Respects time. Like this, I have a 10 commandments for time management. If you are not 5 minutes early, you are late. Now, we should all take oath. I was here at 9:15 when it was a 9:30 program, but not more than 15 people were there at that point in time. So we should respect time. As a professional, if you commit a time, you must become a slave of the time. You must become a slave of the time. To that extent, you will have to be committing. Then only, the first sign of a professional is that whether he is maintaining time or not. No? So that's how it is. The respects time. Disciplined and responsive. He himself has to be disciplined and he has to be responding to the needs, responding to the requirements of the clients. He should be adequately staffed. When you will see that most of the chartered accountants would have taken more work than the resources. So in case you do not have the required resources, you will have a problem eventually. Because then you will not be able to catch up with the time. The deadline will kill you more than the work. So the respects time, disciplined and responsive, adequately staffed, technologically savvy. I think this is, as I started, I think that's why I wanted Narasimhan to talk before me, because that is the importance of technology today. So if you are not technologically savvy, you are illiterate. Holistic view of the business. This is the catch. This is the catch. Somebody asked me when I talked about 10 commandments for business, Acharya, which do you think is the most important of all of them? In that context. Now here I would say of all of them, maybe the most important is the holistic view of business. Let me spend a minute here. What do you mean by holistic view of the business? I see some of the chartered accountants talking about taxation. If the client says, sir, I want to pay 10,000 rupees only as advance tax when it should have actually been 1 lakh rupees. If you succumb to that pressure of the client and say 10,000 rupees pay karo, theek hai, you will have to at that point in time go on to tell him what could be the repercussion. You should also probably tell him the importance of paying higher tax and tell him the tax is a cost that you are paying for your eventual growth. The tax is a cost that you pay for your eventual growth and probably for a bigger, larger purpose of peace of mind. If you get caught, I already told you, compliance is costly, non-compliance is costlier. And I remember Naik's very good dialogue, pay tax and be fine, otherwise pay fine. Pay tax and be fine, otherwise pay fine. That is a very, 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 very good catchy words of wisdom, wise words from the wise man. So holistic view of business. So you need to, please understand, when you are talking about tax, you are not talking about tax as one aspect. You are giving him a total business solution rather than only a tax solution. If he asks you, can I give a loan from this company to this company? From the company law point of view, maybe 185, maybe 72, all these deposit sections, loan sections, it is okay. If you say yes and ignore tax, it could be a case of 222E. It could be a case of deemed dividends. So you cannot, as a consultant, look into one aspect and forget about the other. So the client expects you to give him a holistic solution rather than a piecemeal solution. I would now say 9th is more important than 8th also. What is the 9th one? Charges a reasonable good fee. This is what I am telling to all the chartered accountants, that you should charge a reasonable good fee, and to all the MSMEs here. If you are paying less fee to the chartered accountant, then I think you are not having the best chartered accountant. So that is how I would like to now market the profession. So please pay well so that you are getting the best of the solutions. Who can, at the end of the day, who is the best CA? One who can be a trusted advisor. I think trust is the key. So with this, I have to close my session, but let me see if I have missed something. The important laws in India. In fact, Nayak sent me the moment that from Chennai, from Mumbai when he called. Don't worry, what are the topics you would like to handle? Then I said, okay, compliance is what I would like to talk about. Then he sent me a 120 slide presentation on compliances. All the 120 slides I put it into one slide and said, these are the various important laws in India which you have to comply out of the 993. Quickly I will read out the PF Act, when it is applicable, when you are having more than 20 employees, including the contract employees. Although those slides of Nayak used to have 12% employees contribution, 12% employee contribution, then what is that? EDLI. Now, to that extent it is there. Here I am not getting into that. So I am just touching, giving a bird's eye view. ESI Act, entities with the aid of power more than 10, otherwise it is 20. MSME Act, all manufacturing and service enterprises subject to the limits of turnover and investment in plant and machinery. Factories Act, applicable to all factories. What happens in a factory if somebody is injured, all those things are taken care of. Payment of Wages Act, Employees Compensation Act, Maternity Benefit Act, applicable to all entities. Payment of Bonus Act, all factories and all establishments employing more than 20. Payment of Gratuity Act, all entities employing employees who have completed more than 5 years. Payment of Gratuity Act is applicable. Contract Labor Act, Import-Export Act, Import-Export Code, then Sexual Harassment Act, all entities, Minimum Wages Act, then the professional tax. Please understand, this is one of the reasons one of the companies had no business for 10 years, but he had forgotten to pay 2,500 rupees professional tax every year. Although he did not have any business, he ended up paying 25,000 rupees with interest, which is about 50,000 rupees. So whether or not you do any activity, professional tax, there is an enrollment, then there is a registration, one for the company, one for the employees who are drawing up to more than 15,000 rupees, 200 rupees reduction you have to collect and pay. And the Shops and Establishment Act. So these are the gamut of acts most important out of the 993 acts. There could be penalty on auditors also. All the MSMEs should understand that the auditor, when he signs, he is not the final authority. He may be subject to audit. The Central Council member, he is here. Today we have a very strong mechanism of peer review. Now peer review now is mandatory for all those firms which are doing the central audit of banks. It is now, next year onwards, it will be applicable for all those firms which are doing the branch audits also. And from this year, 1/4/2023 onwards, my firm, because we have 5 partners, we have to be mandatorily peer reviewed. Otherwise, I cannot do. Any firm with more than 5 years, 5 partners, 5 and more. They are going to increase, and eventually they are going to cover all the practicing chartered accountants for peer review. So there could be penalties on the chartered accountants, samskaras for companies. Okay. So also to private limited companies, CSR, internal audit, rotation of auditors, whole-time company secretary, CARO, and things like that. Private company exemptions, we talked about. GST 20 lakhs and above. If you are an entity which is doing supply of goods, alone 40 lakh rupees is a cutoff for GST registration. If you are into services, 20 lakh rupees is the cutoff for GST registration. If you are supplying both goods and services, then it is 20 lakh rupees. Then you can also go in for composition of the GST, that means up to 150 lakhs of turnover, without collecting GST, you can just pay 1% and be done with it. And this payment is on monthly basis, but return filing is on quarterly basis, QRMP model. So registration of GST is also mandatory in certain contexts. These are the contexts. Aggregate turnover we have talked about. Interstate taxable supplies. If you have interstate taxable supplies, you have to mandatorily register, irrespective of your turnover not reaching the limit. Casual taxable persons, that means if you are setting up an exhibition and things like that. RCM taxpayers, that is the reverse charge mechanism taxpayers. E-com operators, non-resident taxpayers, persons required to make TDS, and others like that. And please understand, once registered, if you are registered, you don't have an option but to collect and pay. You cannot say, I'm just registering for the sake of it, and thereafter, once my turnover crosses, I will see. No. Once you register, whether or not your turnover reaches the limit, you have to file the GST return. Who should file income tax return? Individuals having a turnover of taxable income of more than 2.5 lakh rupees. Companies and firms compulsorily have to file income tax return, and there is a concept of TDS, TCS. Okay, let me just stop here. Why should I talk about just 10 commandments when we have our own Dashavataram? Okay, let me just cover it in 5 seconds or maybe 10 seconds. Have at least 3 partners in a partnership firm. Have 2 persons as authorized signatories for GST. Why? Because if one of them is not there, still you can file the return. Why did I talk about 3 partners? If in a 2 partnership firm, one of them dies, the firm is considered to be dissolved. Firm is supposed, so then it is all the taxation implication applies. So 3 partners, at least if one of them dies, 2 will continue. Have properties and bank account lockers in joint names. Have nomination for all financial assets. Have a complete list of assets and liabilities updated periodically for your family to know. Prepare a will. And prepare a will, I always keep telling, age is not the criteria.
Yes.
Assets and legal hires are the criteria. Okay. Buy immovable properties in individual names instead of company name. Passwords to be, okay, passwords are important, but reveal it to your spouse in case you have trust in her. Okay. Ensure safety of your DSC. Please, this is a very important point. The DSCs are your signature. If you allow your DSC and give it to somebody and says that you use it, he may misuse it also. So please take care of that. Giving a DSC to some other person is like signing on a white paper. Have external backup of all computer data, goes without saying. Let me just complete it. And before I conclude, I have to tell you one thing, that the Bs, Pradhan sir, I think I told you this, in the Atmanirbhar package, about how much, I think 21 lakh crores, they gave 500 crores towards bees. Because bees are very, very important. Then we were saying bees in the end lava, they give you honey, they give you probably wax. That's what is apparently known. But the bigger role that they play is, I think it was Albert Einstein who went on to say, bees disappear off the face of the earth. Man would only have 4 years left to live. Why are bees so important? Because they help in pollination. What is pollination? I don't have to tell that. Between 2 plants, they enable the growth of further ecosystem. They enable the growth of ecosystem. Just as bees enable the growth of ecosystems, chartered accountants act as pollinators in the economic ecosystems, connecting the banker and the borrower, the tax department and the taxpayer, management and the shareholders. Thank you so much.
It was an illuminating and executive session. We appreciate you making time in your busy schedule. Thank you all for all your guidance and support. We Ballarians feel embraced. We know we can always count on you to be there for us. Thank you for being such a great resource and mentor. Once again, thank you for capturing the event so perfectly. Namma Mannina Maga, Namma Abhimana. With this quote, I request CA Prasanna Sir, immediate past chairman of Ballari branch, to give him a memento. It is our appreciation token. Kindly accept it, sir.
Be busy like a busy bee.
We have to note all the quotes of wise men.